Hello and welcome to Money Monkey Africa, your go-to financial podcast. Joining me today is Felix Ochuoga, our investment guru, if I might say. Yes, he is the founder of Adonis Capital, which is an investment company, and he will tell us more about it. He loves playing golf and has been in the investment journey and experience for 15 years. Yes, welcome, Felix.
Thank you. I don't think I'm a guru.
Well, our team will say differently.
I tell myself this. I'm just a learner in terms of investment, and every day is a day to improve on what you've learned from yesterday. So I'm just an investment learner like you.
Yes.
Though an enthusiast though.
Yeah, and I love your philosophy about no ego, just create wealth.
Less ego, more wealth.
Yes.
The other way that I also like to put it is that learn to delay your gratifications.
Yes.
I think for most of us that we imagine that being rich is being a popular hip hop artist somewhere.
Yeah.
I'm not talking about Jeezy. Jeezy is very wise with his money. I'm talking about, I don't know, Travis Scott, the latest. Who is the latest in the market? You know them.
Yes.
So, there's that rich living lifestyle that we put out there that we want to have. And there's a difference between being rich and being wealthy.
Yeah.
So when you look at all these things that you're trying to accumulate in terms of assets, that is not really investment. That is to give you status. So tell people, if you really want to grow rich, less ego, reduce on trying to build a status. Then when your ego is less, your wealth grows.
Yeah.
Because less ego on invest on knowledge wealth means that the more you tell yourself, I don't know about this, then the more you're able to learn, you're able to take more ideas into it. So
wow.
Less ego, more wealth.
Less ego, more wealth. Wow. And just on that, we were talking about golf as an investment. Yeah. How did you begin the sport?
It was a childhood dream, really.
Yeah.
And the other part, should I talk about it? So I remember there was a time I was with some of my friends on an evening out, Friday, and so I met this guy, and he's a radio presenter, and he's telling me about Buddha, unafaa ku join golf. I was like, okay, yeah. I'm listening, and it's loud, and for like you're all dancing and you're vibing, and you're now talking about how golf has transformed his business, and I was like, this is something that I'd love to do. So I just listened to him. I was like, pick it up and go. And he introduced me to these guys. They're called in Africa, and they train young people about golf. Really, golf is easy to play, but also very hard.
Yeah.
You could go to Muthaiga today and Muthaiga Golf Club or any other golf club, Royal Park and so on, and get a caddy, pay for it, and start learning through. By the time you play 3 or 4 games, you're able to get an inner glimpse on it. But I'm telling you, you'll miss the ball many times, but you'll get there. By the time you get to 18th on the 9th hole, you're somewhere there. Yeah.
Wow, I love that, and I've always wanted to go into golf, but then I'm like, golf is expensive. Debunk that myth for us.
Everything is expensive.
Yeah.
Nothing is not expensive, really. If you asked me, everything is expensive. The only thing is your order of priorities. If you think about it, how much do you waste in a year? Just look at yourself. Go to your M-Pesa today and look at that breakdown of the amount of money the income you got and spent it all that. If you think about it, that's a lot of money. So it's true, it's expensive, but it's so looking beautiful, right?
Yes.
Everything is expensive. It depends on what do you want to achieve? What is the investment that you're trying to get yourself into? So I would say it's not cheap also, because it's I think every sport is not supposed to be for everyone.
True.
Ronaldo is good at football. Yeah. So is Messi, same. Kobe used to be good at basketball, right?
Yeah.
And LeBron and all that. Everybody has a particular sport, and when you get good at it, it's able to open doors for other areas. So you could be good at, I don't know why we've never had Kati for a sport that we watch, but
true.
Should be there.
Yeah.
But somehow what golf gives you is an opportunity to talk to someone for like 4 hours, because you're playing a team of 4 people. And when you're playing against 4 people, if you're talking about business, if you're talking about a particular product you're bringing in, then you're able to explain it. And that whole arena where it's silent, you take away all the distractions, all of it, and you're now getting into the right thing. And then you're also more relaxed because you're playing, so you're inviting yourself into the game. So that's the whole thing about golf. But being expensive, I'm telling you, try dating Nairobi.
lol. Yeah, so, debunking the myth of golf, and we were also talking about the myths of investment. And as Adonis Capital, what you are bringing a new, or rather, a great way, with all honesty, from what I've heard of investment, of how to think about investments. Could you take us through that?
I think I hated the narrative that investment has to be 100,000 plus. Really.
Yeah.
If you think about it, let me give you today. You use Safaricom, right? If you look at your bonga points, how many are they? Mine are 10,300. I was like, wait, what?
Wow. Okay.
That's a million credit that I've used. That's not okay. That's bad. That's bad. I wish
I redeem mine.
Yeah, I wish I could take some of them, but think about it this way. Investment is simple. There's a time Safaricom shares back in 2009 when they were listing. It was going for 5 shillings a share, right? So imagine that on that particular day, instead of buying credit, your 500 or 600 could have bought you shares, right? So that's as simple as investment. And at that time, your 600 today would be 4,300. If you were to do compounding, that's over 15% per year, 16% per year. If you just look at that, that's the simplest, I would give, that's a simpler way of looking at investment.
Yes.
So even right now, your 5K, your 10K, 2K, 1K, 1,500 should be enough. Or if you don't have that, what you do is just keep saving. Put some there. The easiest way to start investment is by saving. I learned to invest at a very young age. I come from a very low background, and my story was that I noticed that the only way I could grow in terms of money is put a savings. So nikipewa sadaka 10 bob, 5 shillings used to go into my piggy bank. I bought myself the piggy bank, by the way. And then at some point I noticed that it got very heavy. And then I started now loaning people through that at a younger age. I was, I think, probably 8. And I was loaning. And some of my brothers paid me years later. And the amount they were paying me was 50 to 100K, the difference. So that was the simplest way of starting investment. It's not looking at stock market. I think investment is so easy to look at it. If someone will ask me, how do I make investment? I don't have that kind of money. And then I'll ask them, yet you're watching Netflix. Yet you're buying credit to spend on TikTok. If you're watching TikTok, tell me you're watching something educational, then you're investing on yourself. Simplest ways. I saw a meme someone saying that down here, up here, I don't have money to invest. I don't know what to invest in. I'm poor. And then down here, there are all these costs that are weighing this person. Kuna movies. Kuna sodas, you don't even need those sodas. And then the other side, kuna Netflix, kuna all these costs. Are they really important? I love when sometimes when I get into my Instagram and then I see someone writing, the cost for Netflix is around $10 a month, right? So that's 1,020. That's on $20 a year, right? At some point, Netflix was way cheaper the stock. So you imagine if you had invested in
Netflix
at that time. Or you look at your Safaricom as an example. Now back home, let's go to Safaricom, let's go to Equity, let's go to cooperative. Instead of you putting your money into a shares account, why don't you open up a share account instead of savings? Open up a share account and say, okay, I have my 5K. The highest equity goes in terms of per share usually around their 50s. So you can wait when it's 40 and you say, so I waited, now it's 43, so let me buy. And that's an investment for you, because now what equity will be doing, they'll be paying you in dividends. And dividends, less tax. They only takes, what does it take? What's the name of that tax? When you get to my mind, I'll remind you.
Okay. I believe what you're saying is that investment is, I love what you said when we were starting. Investment, the best time to invest is yesterday. The best right now is when you can leverage it. And, in investment, I believe most people are passive they want to, but then they're not acting on it because they think it's complicated. Yeah. So how does Adonis Capital make it easy?
It's very simple. So first, before even making it easy, we wanted to change the narrative. I would want a young person out here to be able to start investment as young as they are.
Yeah.
And I say this, when you start investing, a lot of your life gets to change. A lot of things in your life gets to change. Even your friends, you notice that you want now people that are investment oriented. So our narrative is very simple, that with 100 shillings, you're able to start an investment. So we have a variety of funds.
Yeah.
When you get to our website, you can see, okay, what works for me. At the same time, we've also positioned them differently, because if you're looking at 10% club, that's the one where you can start the 100 shillings. If you're looking at business fund, then would require bigger capital, because you're looking at the risk factors and also the returns that you're going to give in and so on, and also that as a time factor, what you're going to get yourself into.
Yeah. Thank you. So I love the way you know your stuff. Direct to the point. So let's talk about real estate, and investing in real estate. A lot of people want to, but they don't know where to start. Yeah.
Real estate.
Yeah.
Yeah, fun enough is I did real estate in uni.
Oh wow, interesting.
Yes, I did Bachelor of Real Estate in the University of Nairobi. If I was asked to go back to UIN, no. But UIN is good.
Yeah.
But I think, so real estate, for a long time, real estate has been for the chosen few. Or the reason I will say the chosen few, because of the high amount of money that is required. And still somehow, we're getting it hard getting there. But real estate is simple. Let me define real for you. Real is property, some tangible property, something that you can touch. And then an estate is basically a surrounding of a particular place. So when you're in an estate, that whether it's an apartment, whether it's some townhouses, mansionettes that you're in, that there's like some fence, some perimeter wall across it. That piece that you call real estate, that becomes real estate because it's real, and then you can touch it. So that's basically real estate. So real estate involves land, it involves property, things like apartments. Apartments is high-rise buildings, townhouses, mansionettes, commercial buildings, things like warehouses. Yeah, those are now example of real estate. So in terms of that, there's also innovations in real estate, things that what else can we get into? So for us at Adonis Capital, we have a new product. We're hoping that by the end of this month it should be out, that you'll be able to invest in a unit of a property. Not to have 6 million to invest in one, or 20 million to buy one, or do mortgage, because mortgage is part of real estate. But with my 10K, can I be able to own a unit in a property and then at the end of the year get an investment in it? So there are things like, it's part of what we call real estate investment trust. But for us, we're introducing something called property market, where you don't want to just look at the Nairobi Stock Exchange market, but can we have a property market, something that can innovate in terms of how we own properties in the world. I think it will be the first in the world, because if I'm looking at the real estate investment trust, it's based on people coming together and saying, okay, so Carol has this property, and the property, if it was to be sold, would be 100 million, and she has the expertise. So let me give us Wangoi. So Wangoi has the expertise in terms of architecture, and then Felix here has the financial know-how. And then we have a quantity surveyor, where we have another person here, and then we have the other group of investors. So that's how the real estate investment trust come in. We create a trust where all of us have something to offer. So you have money, I know how to spend it, you quantify the cost, I get the structure, you provide the funds, and I have the land. So if someone was to buy this land, it would be very expensive. So what can we do? So now we're coming together, and then at the end of the day, we tell ourselves, do we want to, after developing it, do we want to sell it, or do we want to keep it? So if we are developing to sell, then we call it a development rates or D rates. So that's now how it comes in. And then if you want to look at, can we be getting income out of it, like things like rental, Airbnbs, hotels and so on. So then it becomes an I rate or income rates. So that's how now the concept of our other real estate works. So now this is in terms of rate structure.
Yeah.
So yeah.
Okay.
I don't know if I've explained that enough.
Yes, you have. And honestly, I love the way I'm not into the investment space. I've not really learned it. I'm just finding myself in it. And I can understand where, because some finance guys use a lot of terminologies. Right now I'm doing my CFI and I'm like, okay, oh my gosh, these things are so complicated. But then,
busy.
Yeah.
let me use this from Warren Buffett.
Mm-hmm.
Anything that you hear about investment that is complicated,
yeah,
that is a scam you're getting yourself into. Investment should be very simple. Mama Mboga, let's use Mama Mboga. We are in the hustler government, right?
Yeah.
So let's use this. So this Mama Mboga is for those people who don't know Mama Mboga. Mama Mboga is someone who sells groceries. That's how we call them in Africa. So this Mama Mboga buys stock from a wholesale, right? And then she gets to sell them. So she makes a profit, right? And then let's say she started with 5 bunches of sukuma wiki and 3 cabbages. That's what she was able to afford. And there's few onions and few tomatoes. So the next time she buys, she decided, okay, I'm not going to eat my profit. I'm going to plow them back into the business. So you'll notice that the stock is increasing. That is a simple way of me explaining to you an investment. The other way I will explain investment is in terms of education. 844 on OCBC, for all those years that you've been in school, you started by learning counting, right?
Yeah.
And then you learned about addition. Those are investments. Now you're doing CFI. Congratulations.
Yes, thank you.
So all these things that you've been developing, all this knowledge getting you to this particular place, these are all investment that you've been making. Only that you've been told investment is, I don't know, some crazy terms.
Yeah.
It's supposed to be very simple. If it's not simple, I call it a scam.
Yeah.
Simple as that. Remember how I explained the unit trust for you, how we are introducing a property market? Is because, this year, let me give this. This is a property, okay?
Yeah.
And then the rental is going to be this. You understand how rental comes in because you live in a house, okay?
Yeah. So
at the end of the year, when we've collected all the rent, there is the property manager that has to get their money out of it, right? And then there's a trustee that has to is acting on your behalf.
Yes.
So when that fee has been charged, what is remaining is now distributed based on how you invested. Simple as that.
Yes.
There's no, I'm not trying to, investments, please, when only finance people are supposed to understand, and that was a complex, are supposed to understand calculus, and calculus is supposed to make it easier to understand, concept, I'm going to build in strategy, but for a common man. And the best investors are not even financial advisors. It's a simple person.
Yeah.
But if you look at the team, and I like to use Warren Buffett team, Warren Buffett and Charlie Munger, the guys running Hathaway Berkshires, the only one company that one share is equivalent to 5 Range Rovers, and I'm not talking about here, outside. That's that big. And it's because none of these guys went to an investment school. Charlie Munger was a lawyer, and Warren Buffett got into investment much later and understanding it from doing MBA. The rest of it, not really so much.
Yeah.
But look at the trajectory that we've learned about so much about investments. I literally have a book on Warren Buffett investments, how to make investment. But he says it's simple. It has to be as simple as ABC.
Yeah.
More than that, achana nayo. Leave it alone. Yeah.
So explain to us inflation, in a simple way, because currently the inflation rate is 9.5, and how someone is like, okay, why is inflation affecting me? It
reminds me of being in my first, my economics teacher used to tell us that the reason you're going to learn inflation is that you're going to learn about economics is because you need to understand why you need to vote. You also need to understand why you need to take a bus. Simple things, and that's the same thing with inflation. And then they gave a story of Zimbabwe.
Yeah.
But I'll give inflation as this. Think about when it's raining, okay?
Yeah.
So before it rains, if you're going to, let me not use Rongai. Rongai is, I feel for those people. So let me use Ngong Road as an example. So before it rains, around 5 p.m., the bus is usually around 60 shillings, right?
Mm-hmm.
But the moment it rains, suddenly the fare goes, if it was 60, goes to 80.
Yeah.
If it was 80, goes to 100.
100.
So what happens is we are rushing to get something. So that's how it works. So in terms of economics, your money can only can only satisfy certain needs. You get, we're not Elon Musk where we could have anything that you wanted we could get, but you have 20,000, okay? So what can your 20,000 do for you? It has to pay your rent, it has to pay for this, it has to pay for that. But now that the prices increases, now I'm giving you the story of this rain. So when it rains now, we are all rushing to get home. So how are we going to get home? You're asking yourself, I need to get home to my kids. I need to do this. My clothes are in the hang line and so on.
Yeah.
So we are rushing to get these needs. So that's how it comes in. So because the guys, the bus drivers understand these needs. So what do? They capitalize on it.
Yeah.
Okay. So what happens is now in terms of things like maize flour and oil and so on is that one thing affects the other. It's like a domino effect where if the price of fuel increases, this guy from the farm has to take his maize, has to transport it to posho mill. Yeah. And this portion mill will also either use electricity or oil. So you look at, because oil becomes a factor, because it has increased, it will have to, also the guys in maize has to pay more fare. So based on that, has to pay for more transport. So based on that, that's how inflation goes high, because one thing will affect the other. The price of one thing will affect the price of the others. When it rains, if you're in Shags and those areas, it's muddy. So you have to, if on a normal day, I've lived in Nyandara before, so on a normal day I'll carry 20-liter jerrycan on this side and this side. So today I can't carry, right? Yeah. So either I have to bring another person to help me, and I don't want the milk to fall down. So if I don't want the milk to fall down, that means I'm paying extra cost, right? So how am I going to cover for my cost? Because the first thing we're taught in business is to make profit, right? Yeah. You don't want to make losses. So based on that, that's now how inflation goes on. Wow. And then the other things are just extremely complicated. I wanted to explain as simple as that.
Wow, okay. Amazing. Thank you so much. I've learned a lot from that. As we finish off, tell us about investment, how to start investment, in Kenya. Just simple ways you'd advise a mere man to start investment. And also, how is the investment space in Africa? Yeah.
Okay. Let me start with the last one as I come back.
Yes.
So investment space in Africa, we're really waking up. If you ask me, we're in a generation where relationships don't really matter, but growth. We're looking at how can we be able to grow from one angle to the other. So in terms of Africa, I will say countries like Ghana have really good stock market. West Africa, Nairobi though our stock exchange has been performing poorly, really. Let me be honest with all of you. We need innovation in that area, but they're really growing. You'll see stock market across the Salam Stock Exchange market doing well. There's the one in Uganda for Kampala, and even now Ethiopia is trying to get into the investment space. So the only way nations are able to grow is not through debt. It's through learning to invest. It's as simple as that. I love what our current president said, that we cannot borrow when you do not have savings.
Yes.
I like, when I heard, I was like, I think we have someone who understands the culture that you need to have. So starting to invest, I would say start by saving. Simple as that. I mean, there's a market saying in the investment space, we say savers are losers, but sometimes there are battles you win and there are battles you lose. So it's better to start by losing, knowing that you have an end game. So my end game is that I want to invest. Yes, my money will not grow as I want, but kidogo haba na haba hujaza kibaba. So my small here, I put something small here today, next day, and it grows and it increases. So that's how I will say, first get the culture right. Say corruption and everything that is happening is about the culture. So get the culture right. Start by having a saving culture. Now, when you have a saving culture, because if you learn to save, then you'll know how to put that money in the right space of investment. There's an artist, Pitbull, says that quick money come and goes quick. It says it's like dope money. It comes quick and goes quick. So money that you've not worked for, money that has not been you saving, you may not know how to invest it. So say this, start by saving. Teach yourself how to save. Because the moment you're able to save, then you're asking like, I have 100K, or maybe I have 10K. Let me make it simple. I have 5K. I've been saving a few hundreds, putting them somewhere, because if you are going to buy it was 5 and you bought 3, so you save 200, right?
Yeah.
That it pained you, because let's say you like to eat a lot, but no, you took a little. That means you've denied yourself this. So learn to deny yourself this, and that's why you talk of learning to delay your gratification to achieve more. Then after that, simple avenues of investing. Like I've said, there's Mama Mboga out there. There's that boy of Smokey and Mayai. Those simple means you create a rapport, know them, because these are people that you know. You start by them. Because I will tell you the stock market, and some of you, people have different waiting capacity. If you tell someone that over COVID period, I think the only companies that paid for dividends was BAT and I think Safaricom. BAT is British American Tobacco. The only companies that paid for dividends. Some of these other companies did not. So if you tell someone that I had put my 5 million or 20 million and I didn't get any return on it for 1 year, it will give them they kind of take them into depression that I'm not seeing where that money is going to. So investment is simple. Why I'm giving you all this is so that you see, where do I lie? Am I someone who would like to see my money growing on a daily basis, or can I be seeing where that money is going into? Because some people are like that. I don't call them paranoid, but it's good to be paranoid in investments, that you understand when they invest, where that money is going to. So for the other people, where you feel, I don't want to be involved in seeing what Mamboga is doing or the other person is doing. I just want to see my money somewhere.
Yeah.
And then you look at, I don't want to choose the stock market. So go into the mutual funds. I say, if you're looking to bet big, start by the mutual funds and say, okay, there's this one that exists and there's this one that exists. And now they notice that there are very many in the market, so they're reducing their fees. So as little as 1,000, as 100, you're able to start somewhere. Yes. And then you keep increasing. So it's more of like an emergency investment fund. So in terms of investment, also ask yourself, am I a short-term person, medium-term person, or a long-term person? Short-term is between 1 year to 2 years, 2 years, 3 years. Please do not tell me to invest in 1 year, in 6 months and expect returns. I do not tell people to do tradings. I do not tell people to gamble. I tell people investment takes time. If you're in business, and you'll concur with me on this, if you invested 100,000 on your own business and you paid for all the cost, because transport is your cost, your salary on that is your cost. By the time you get a return on that investment, even 1,000 shillings on top, it's more than 1 year.
Yeah.
You know this because you have to create the right structure in place. So give your investment time to grow. So short term is 1 to 3 years, then medium term is between 3 to 5 years, and then long term is beyond 5 years. What are you looking into? And then if you're a high end, you have big money, you want to bet, and you're asking myself, how can I schedule my investment differently? There are bonds, there are bills. So bills, every central bank in Africa the government also wants to borrow to facilitate some of its projects. So there are things like bonds and infrastructure bonds and so on. So this exists. In the private market, there are things we call commercial paper notes or corporate bonds. Najua, when people are told about doing their corporate notes, what are those? They're just simple. They're commercial bonds. The same way government is borrowing, these firms are refusing to borrow from the banks, but they're borrowing from the general public. So they're called commercial bonds that you're able to get in. But I know these ones, minimum will be 100,000. Same thing with bills. Minimum is 100,000. But if it's bonds for government, its minimum is 50. And then, for example, now for the Kenyan government, for all bonds, they pay twice a year at least. That is 6 months and then 6 months later. So in this case, if you get your first return here, this is just interest by that you're getting. And then when the bond matures, if it was 5 years, 6 years, then you'll get your returns later. So I've given you bonds, stock market, simple as Mamboga, that guy was Smokey. And you could also come in as a chama, because people have not talked about circles. Now circles also are other avenues of now investing.
Yes. Where
you're looking at how can we grow in. And in terms of circles, I like to just give into this. Please let's learn to get cultures from communities like Jews and Muslims. Maybe it's something we can talk about next time. But on their principles of how they create a community together to be able to invest their money in different angles. Yeah. So those are now venues of how circles have grown. So circles can also grow your investments. Yeah.
Oh, as parting shots, what's an advice you'd give to people out there, and how also can people connect with you?
I think the lesson I'll give is still based on my biggest money interest, or rather principle: less ego, more wealth.
Yeah.
Let me tell you, life is simple. Don't if you wanna travel, you could travel. Go to Uhuru Park and just observe the nature. That's a treat for you. It's simple as don't try to live someone else's life. We all have our own lives. And if you learn to delay some of these gratifications, KFC the next time, this and that, all this, it's simple as try and sit down and say, what do I want? And try to get a goal to it and try to achieve. Or just get in touch with us. We'll be able to help you on how can you be able to structure investments towards that. It's simple, as easy as that.
Yeah.
Investment is not hard. It's simple. Simple. Yeah.
Thank you. So how can people connect with you on social media?
I think, is there a point? I don't know. Search on me on Instagram.
Yeah.
Felix Ochuoga. LinkedIn the same way. Felix Ochuoga. Twitter. The same. I don't know if I changed.
Yes.
But yeah.
And also your website, Adonis Capital.
.co.ke.
Yeah.
Simple as that.
Thank you so much, Felix, for coming and just joining us. It's been amazing. I have learned a lot, and I believe in the team has learned a lot. And yeah, have an amazing end of year.
Wow, thank you.
Yeah, thank you. See you later in the next episode.